Regardless who the president is, hard to maintain this momentum we've been on. We're up 50% on the market over the last 2 years. We averaged a little less than 11% since the history of the S&P 500 for the history. In the last 2 years, we've averaged over 25%. That is unsustainable, regardless of how great we are.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Hey everyone, welcome to The Market Moment. I'm Lee Mackey here with Isaac Johnson and my mom's favorite podcaster, John Martfeld.
Probably everybody's favorite, but I love your mom for that.
Yeah, there you go. How's everyone?
Doing good.
Yeah?
Yeah, doing good. Getting back in the flow with Monday off, but
it is.
It feels weird.
It feels weird. Today is Wednesday. Our normal podcast record day is Tuesday, but it does feel like a Tuesday.
Yeah, it does.
Or in some respects, it feels like a Monday. But anyway, how's everybody's long weekend?
Excellent.
Great. Yeah, it was good.
Excellent.
Got some good rest as
Football,
much as you can with a kid. Great football.
Inauguration. I mean, it was a busy weekend.
It was a big weekend.
Martin Luther King Day. I mean, it's a busy day.
Yeah.
Busy weekend.
And it's cold.
It's
freezing.
Yeah.
You know, I don't know. I assume most of our listeners and viewers are in this area, but man,
well, even
cold.
Florida is getting snow.
Have you seen it?
crazy.
It's crazy.
Yeah.
They got almost a foot of snow in New Orleans. I mean, it's
I know, that's nuts. I mean, they haven't seen that probably
in
once
a
every
lifetime.
50 years. Or
Yeah.
It's crazy.
I saw something on the news the other day where Arkansas sent a lot of their plows and salt trucks down to Louisiana and
Seriously?
Florida. And, because
I can't
They don't have
imagine.
it. Yeah.
I know.
our four.
yeah, exactly.
But
That's great.
anyway, it was a good weekend. John and myself and Eli spent a few days up in Kansas City.
That was awesome.
With a partner of ours, Advisors Excel, and they were putting on a great conference, and we got to hear from some great speakers. So hopefully we can apply some of what we learned to our business here at Mach 1. But today what we want to talk about is, you know, as we kind of begin this new year, we're beginning to see clients in the office, and, you know, we just want to talk a little bit today about some of the common topics that we're hearing brought up, questions that some of our clients are bringing to our attention. And so I thought we would just kind of kick it off and, you know, what's been on clients' minds as we finish 24 and as we roll into this new year. I mean, you got not only a new year, you got a new administration, you've got a new Congress. I mean, so there's a lot of perceived optimism,
Right,
if you will. There's probably more optimism than pessimism, I would say. Whether that's warranted or not, too early to tell. But there's certainly a buzz about, you know, changes in Washington, how that affects our money. Does it affect strategies? So I'll just kind of throw it out there to you guys. You know, what are some of the questions or comments that you're hearing, and what are y'all telling some of our clients?
Do you want me to take this one?
I could just like a very general, like, I think you guys probably have the same thing. Like I had a list before the election of people to call if this person won, people to call if this person won.
Yeah.
They were like, hey, I'll put more in the market if this happens or if this happens. I've, as a listener of this show, and this is my second or third time on it, I think you guys have already done a good job of kind of explaining, like, it doesn't really, the market's going to do what the market's going to do. I like to think of, you know, laws and administration kind of as the rule book. And so these companies have to figure out how to play by the new rules that are coming in.
Yeah.
And so kind of seeing how they adapt to those new rules is something on the horizon.
You know, and I think, John, I know you have some comments on this, but one thing I think it's interesting is, at least with the new administration, it's not a complete unknown. You know, he was president for 4 years. We have an idea of his policies.
Yeah.
Now, I think there's a lot of people think that this term or his second term, it might be a kindler, gentler Trump. It might be a Trump 2.0. I am one that thinks that he's got the opportunity to create a legacy. I mean, he's a lame duck. He's not running again.
Right,
He
right.
can't run again.
Right.
Mm-hmm.
And so I think he views this, especially the next 2 years when he's got a Republican House and a Republican Senate, as an opportunity to do some good. Yep. So, John, what are your thoughts?
Here's a couple things. So, number one, going back to what Isaac said there just at the beginning, the president, and we give way too much credit to the president, and we give way too much fault to our president, right? Mm-hmm. It's kind of like the quarterback of a football team gets all the praise, but if they win, and all the hate if they lose, when we know that it's
there's 10 other guys on the field,
and defense and everything else. So, I think that's number one. So, go back to 1981 when President Reagan won. He won the 1980 election and came off a very tough Carter administration and high inflation, and just things were in the toilet basically in this country. And Reagan came in with massive optimism, and the day after he got elected, the market went up about the same percentage as it did after Trump got elected this last November. The problem is the market went down after that for about a year or so, mm-hmm. until Reagan's policy started to come into play, and we started to see that momentum going. And so it took about a year for that market to take off. The difference between that market and this market, and this is a massive difference, the average PE ratio of stocks when Reagan took over was 8 on the stock market, 8. Today it's 28. Now, for people that don't understand what I'm talking about, price to earnings ratio. Historically, the S&P 500 average price to earnings ratio average is around 16. So, and that's price of the stock divided by earnings equals 16. So if it's at 8, the stock is in a great value position.
Sure,
if
cheap.
It's at 28, it's expensive, right? So number one, I think that we need to temper our expectations simply because the market's overvalued. So regardless of if he comes in and does all these great things, which I do think there's a lot of great things on the horizon, it's going to take time. And I don't think it's a different market than back in Reagan's time.
And I wouldn't even let's forget about the market. He's inheriting a strong economy, a very strong economy. I mean, it is almost kind of like, can it get better from a general economy standpoint?
There's a lot of things that can get better. So think about like energy. His policy on energy is that he's going to drill, baby, drill, right? And then the AI announcement yesterday, which I thought was huge, and it's more about our wonderful technology in the United States, which we lead the world. And he just kind of made that new department or whatever it was called to kind of stamp that AI and really invest a lot of money into AI for our military, for everything for the U.S., which I think is pretty awesome. And those things like the energy, go back to 2020. When he left office, gas prices were about half of where they are right now, a little less than half. So inflation's been a big bugaboo for 4 years now, right? I mean, really started in 2021, 2020 COVID stuff, 2021, 2022. And then it's kind of tampered down a little bit, but it's still way above where it was in 2020. And one of the leading forces of inflation is the price of energy that costs to get things to stores and so on. So I think one thing that I'm looking forward to is like the energy prices. If they go down to the levels they were in 2020, which is basically half of where they are now, and so $1.80 a gallon versus $3.50, that will help inflation. And it's like something we don't talk about on our day-to-day. We talk about inflation, that the Fed is doing this and they have to do this to help inflation and raise rates and all that stuff. We can have natural inflation coming down by just simply fixing the gas prices, right? And I'm excited about that.
And gas prices, are a regressive tax, meaning they hit everyone, and they hit the lower income harder,
right?
Hence regressive, than the higher wage earners. So, you get a 50-cent drop in a gallon of gas,
it affects the economy.
It affects everyone.
Yep.
I mean, it everyone who drives a car, a motorcycle, I mean, anything, puts gas in a lawnmower, it affects. So, there is room to improve in certain areas, but overall, the economy's not in the toilet. I mean,
people are spending money. I mean,
absolutely. I mean, hence why inflation is still
Debbie Downer here. Okay,
go for it.
I understand it. Credit card debt's at the highest level it's ever been in our country. Sure. What does that mean? We had so much money put in the economy falsely in 2020, 21 from government gifts, right? Basically from COVID, and a lot of it needed and some of it overkill, right? But that money eventually works its way through, and it has worked its way through the economy. So now you're getting so people still want to spend because we are massive spenders in the United States. So the one concern I have is that as credit card debt gets higher, where is the spending going to come from, right? Because you think a lot of spending comes from people putting on their credit card to try to maintain that lifestyle.
Yeah.
So wages have to start going faster, and so to me, this idea that now, as you could tell by me listening, you can say, "Oh, I bet he's a Trump fan," right? Just by the things I've said.
I would never have guessed.
Okay. But one thing I say when I have people call me and say, "Hey, I want to invest right now, and I want to take all my stuff out of the safe stuff and get it invested," I actually am the opposite. I'm tempering that simply because there are, to Lee's point, you're not inheriting an economy like what Reagan inherited, with so much opportunity to make it better. You're inheriting a good market, a great stock market. You're inheriting lots of great economic data. It's hard to maintain that. Number one, regardless who the president is, hard to maintain this momentum we've been on. We're up 50% on the market over the last 2 years. That's hard to continue. It's not like we average a little less than 11% since the history of the S&P 500 for the history. And the last 2 years, we've averaged over 25%. That is unsustainable, regardless of how great we are. So I think the expectation that everything's just going to, quadruple to the moon because Trump's in office has to be tempered. And I think but the long-term view of what we're doing for the economy via AI stuff and less regulation and lowering gas prices because we're pumping more fuel, oil, and natural gas and so on. There's optimism long-term, but to me, it's like it's euphoric, but I don't think it's just going to be slam dunk. Everything's great just because they changed.
A couple other, headlines, and there's something else I'm going to talk about here in a minute. But obviously over the last week, TikTok has been in the news. Not because
through ups and downs.
The world ended for like 12 hours.
It did. There were a lot of I don't know, depressed TikTokers out there that had no clue what to do with their worlds and lives, and maybe our executive producer is one of those, but who knows? But, they got thrown a lifeline. But it's real interesting that for those of you who need a refresher, TikTok is owned by a Chinese company. Congress essentially said we're not going to allow it in the U.S. The Supreme Court kind of backed off and just said we're going to allow that to stand. Yeah. Unless there's a U.S. ownership of the U.S. version. But the laws are very muddied.
Oh yeah, this is new stuff.
Trump basically said extended them a 75-day lifeline, but again, this is going to end up back in the courts because there's not a consensus on exactly what authority the president has to do this. Because Congress said one thing, and so it's going to be interesting to see who emerges as who's going to own it. To allow it to go on. So
well, from what I've read, like TikTok's open to selling at least the U.S. chunk, but they don't want to give up the algorithm.
Correct.
And so it's kind of this fight of, is somebody willing to pay $50 billion to not know what they own?
Right.
And who's crazy enough to do that?
And
who has the money to do that?
Yeah. And I've heard of a couple groups that have put together the money and they don't need the algorithm. But they're not convinced that their path is legal, as far as the president saying one thing, Congress is saying another thing. So it'll be interesting to see. Another headline is, we're in earnings season, for the next 3 weeks. So, earnings have started off very strong.
Netflix came back last night, even after that atrocious boxing stream.
Yeah.
So
yeah, they did. And, they're up to over 300 million subscribers.
Wow. I thought they were going to stop giving the subscriber count on their earnings. Is that the next earnings?
I don't know, but I have heard
they announced that.
And they're raising prices.
Unless it's really good, they're not going to say it.
Yeah.
And they're
exactly.
And they're raising their monthly subscription for both the ad and the non-ad. One question I'm getting, or at least a comment, is if the Fed is lowering rates, why are mortgage rates going up?
The Fed's not lowering rates.
Well, they have.
Yeah.
I see what you're saying.
Yeah.
Yes.
And what I have told people for many, many years is mortgage rates are not tied to the Fed's bank rate.
Right.
It is more tied to the 10-year than any other rate. And so, we've seen it, that literally this last rate cut in December, mortgage rates went up the next day.
And the 10 years went up.
And the 10-year
because
went
the
up.
10-year keeps
and,
going up.
And the 10-year is a rate that is tied to essentially confidence, and if you're worried about things, global issues, our deficit here, then you're going to pile into treasuries or you're going to sell treasuries. And so what we've seen is that our 10-year, a week and a half ago, 2 weeks ago, hit almost 4.8.
Yeah. Yeah.
We were bumping up on almost 5%.
Yeah.
And hence the stock market sold off. Mortgage rates went well above 7%.
Yeah.
There's talk now and pretty good consensus that we're not going to see below 6 for a year or so.
Right.
Simply for, the 10-year being high. I think right now what has spooked a lot of traders, bond traders, is, tariffs. What is that going to do to the economy? Immigration. There's a lot of Trump's policies, believe it or not, that are deemed to be inflationary, and so there's this concern that inflation will remain high. Hence, the 10-year is going to remain high. So, I do get a question a lot of like, well, rates have gone down. Why can't I buy
a house?
Yeah.
Yeah.
And most of the world, or most of the U.S., locked in at 2s and 3s.
It's
and
another like part of that is like before I was here, I was in the real estate world.
Yeah.
Is not only are people having to find a house and fight these high rates, but to buy a house, somebody's got to move. And they have to move you have to convince them not only to leave their house, find one of the most expensive housing markets we've ever been in, find a new one that they can afford, and give up their 3% for an 8%.
Yeah, they're
not going to do that.
Nobody should.
Unless
We would not advise them to do that.
Correct.
Or they have a kid and they're living in a one-bedroom. Like something's got to happen there.
Turnover has slowed down, and new housing. So going back to 2008, when we had that 3-year period where we did not build houses because of the financial crisis, and we got way behind on the amount of houses that need to be built.
Sure.
And there's a number. You can go find this number, but there's a number of houses that should be built every year to keep up with growth and keep up with when homes kind of fall off the deal. And we've not hit that. And that's why housing has not really hit a burst yet, because
a saturation point.
Exactly. It hasn't hit that yet. But interest rates since the beginning of time, right now we're historically about average, right? I know young people don't know that, right? Young people, and that's another question I get a lot. Is like, and I had one yesterday. I had a young couple came in yesterday. They were saving for their first house, and they had done a real great job of saving. And their question was, should we continue to wait until rates go down, until the market cools off? And I told them, no, I don't think so. You're in your lower 30s. What are you waiting for, right? Is this what I asked them? Like, so what, 4 years from now, you're going to be 35? What are you waiting for? You're 40? You should, you can always mortgage, right? You can always get a refi.
Yeah.
In other words, if you get something at 7 today and 3 years from now it's 5, you can refi. And I would rather people do that. Because I don't think the market, the housing prices are going to cool off as fast as.
And that is, we do get that question, especially with young buyers.
Yeah.
So it is interesting from that standpoint.
Well, and you could see it. I get the Monday Morning Outlook from Brian Rusbury puts out, and he always likes to put in the housing starts. He's some guy that gets on Twitter and rants. Sorry,
he's my favorite analyst
on X.
Yeah.
But it seemed like the Q3 and Q4 of last year, the housing starts kind of slowed down, and you saw like the fear of the developers of like, are we building too much?
Yeah, are we
right?
2008
Are we
repeating?
2008?
Yeah.
So then it slowed down, which made the problem even worse.
Yep.
And now they've ramped it back up at the beginning of this year, and so.
You're seeing what you're seeing now, and I think this is interesting. Even in Northwest Arkansas, you're seeing far less big house developments. You're seeing the more smaller house developments, like 1,800 square foot versus 3,200 square foot.
Oh yeah.
Right, and so the 1,800 square foot might cost as much as the 3,200 square foot did 5 years ago.
Sure.
Unfortunately, but they're keeping the price point about the same. It's interesting.
Yeah.
But it's just less house.
Yeah.
Right, and that's kind of become the new thing. There's subdivisions in Northwest Arkansas that are 3,000 square foot homes, 2,500 square foot homes, and you have young people. And my wife and I drive around. I was like, how? And all these young people afford these houses. Well, they bought them at 2.5%,
Yeah.
3%. Now those same young people in that same kind of line of growing up in their life with their corporate jobs, whatever they've got, they're having to get less house. So there's a way to solve this. It's just less house, and until rates get better, till till house prices go down, which would mean another negative, like a recession or something.
It's funny because I live in a young people that bought too much house neighborhood because that's just the stage of life that I'm at. And you can tell, I drive an old truck, live within my means, did the whole calculation that we do here. And we'll go like walk our dog and my son, and we'll see like a brand new house with a brand new F-250 and a Wagoneer in the driveway. And then like a year later, it's like the Wagoneer's gone, the F-250 is now a 2015 Ford 150, F-150.
Yeah.
And so they're definitely getting hit a little bit as time goes on. They realize, hey, this isn't lasting forever.
Hey, the last thing I want to say real quick. We were talking about the elections and all that stuff. I'll tell you guys a couple quick little stories. In 2000, or when Barack Obama got elected, I had a really good friend. I've told the story before, but it kind of goes to what people are saying today. When Barack Obama got elected, I had a friend up in Illinois who took all his money out of the stock market and he bought gold. He was just so worried that Barack Obama was going to destroy the country, right? I tried to convince him otherwise, but he believed everything was just coming to the end. Well, that was a bad mistake, right? 2009, Barack Obama took over. The market was at 8,000 when he took over on the Dow. It's at 44,000 almost right now on the Dow, right? So bad decision. Go to when Trump was elected. I had some clients out in California that just were afraid of Trump, like he was going to destroy the world, just like my other friend that thought Obama was going to destroy the world. They got out of the market. They missed an incredible market upswing. My point, do not let the politician, the party, drive what your decision on how to invest. If you do planning like we do here, we're going to put you in the right spots, and you're going to be based on your risk tolerance and based on all that. We're not, but there's no need to like let the election make you ultra aggressive or ultra conservative based on just that one piece. There's so much more that goes to the market moving up or down. So anyway, last thing.
It's perfect. All right. Two important questions to these guys, and I know that y'all have a lot of interest in this. AFC Championship game, Chiefs or Bills? Let's go.
Man. Well, I'm pulling for the Bills, although I don't hate the Chiefs like a lot of people. You either love them or hate them kind of thing. I'm kind of neutral. I still like the Chiefs, but I like the Bills too, and I'm kind of want a new blood.
Eagles or Commanders?
I'm going Commanders all day.
That's I've been an Eagles fan my whole life.
right.
I'm
Bills
I'm
or
terrified.
Chiefs?
I want the Bills to win because I think if the Chiefs go back to the Super Bowl, they're going to win it. It's just Andy Reid's unstoppable.
Okay.
So I'm rooting for the Bills.
There you go.
And then
What about you?
Not the Commanders.
Bills, Commanders. And
Gosh.
and it's only
Y'all,
because
y'all hurt. Jaden Daniels is electric.
Jaden Daniels
He's
is so much fun to watch.
He's so good.
He's a good young man too. I
He's-
love his
I like
interviews.
him. He's
For a rookie to be in the brightest lights doesn't seem to phase him.
yeah.
Hey, these four quarterbacks, by the way, all four of them seem like, I have no idea, but they seem like good guys.
Yeah.
Right? I mean, they seem like good guys, which
So-
is good.
I go
He's
back
a
and
root
forth on
for all.
Jalen, but yeah.
Well, he's a good guy.
He's a good guy.
Well,
He's not maybe a great most accurate passer, but he's a good guy.
I
would trade for Jaden Daniels right now.
well, we like to have a little fun here on the podcast and mix a little bit of sports and other things in with our business talk. But as we say on all of our podcasts, if you like what you hear, if you like what you see, Go to YouTube, like, subscribe, give us a shout out, tell your friends about us. We're looking to grow our podcast. We appreciate you joining us this week. For John and Isaac, have a great week, everyone.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. Mach 1 may only transact business in those states in which the firm maintains a notice filing or has qualified for an exemption or exclusion from registration. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com. Thank you for listening to the Market Moment podcast.